In today's video, I'm identifying some of the common mistakes that you often see in trading. Hello and welcome to another ACY Securities market tutorial. My name is Alistair Schultz and I'm going to be your host through today's trading journey. Today's topic is on my top 5 mistakes that I commonly see in trading. And I thought if I give them to you now, then it might mean less of an impact on you later if you ever identify that you're making these mistakes yourself. The first of these is misidentifying the phases of the market. It's really only trending up, trending down, or trading sideways, or as it's commonly called, consolidation. Now, regardless of what time frame you're looking at, you will be able to identify a trend of some kind. The issue with misidentifying a market really comes down to the play of whether or not you're looking at it from the right perspective. It is all about the big picture after all. So if you're looking at a trend and you might identify it in a 15-minute chart, be wary of knowing that it might be a retracement on a longer time frame. And the overarching idea of trying to get that change in direction might be contributing to you having losses. So keep an eye on, make sure you understand what phase of the market you are in at all times. Now this one here, being married to your position, might seem a little bit odd, but the reality of it is it actually follows on from misidentifying a trend. And usually this occurs when you get someone who is in a position looking for a particular direction, thinking that it might be, say, an uptrend for the time being, and they decide that it is still an overall long-term uptrend. And they misidentify that phase, and then therefore their long-witted big observations end up being that they were really in the wrong side of the market. And quite often there's a lot of emotion that goes into this play, and it's not until after the fact, when we've closed the position, often for a loss, when we come back and reevaluate what's going on, that we really look at it and go, what was I thinking? So to combat that, we try and not get married to our positions. It's important to take a break. It's important to come back with fresh eyes and reevaluate your situation. If this sounds like you've done something like this before, then some of those strategies are really important to mitigate those risks are going to involve literally just taking a break for a couple of minutes and walking away from the charts and coming back with fresh eyes on a longer time frame to really see where you're actually at in the market. The next one to look at today is about trading too large. Quite often we find that people over leverage their positions or simply don't understand leverage. You'll find that you'll be risking more than the account can actually handle, and you'll be attempting to recover from drawdowns quite frequently. Of course, we always get the issue with people trying to be a little bit more greedy than they need to be and having what we call hero trades, where they might be trying to recuperate that account because, of course, as we all know, if you have a 10% drop, it means you need to make 11.1% back to actually get back to break even, plus your little bit of profit you needed before. So we might try and load up on our position and take a bigger trade than is really necessary, obviously exposing ourselves to more risk, therefore a hero trade. Now this one is very, very important, and it's all about how you actually treat your trading. All too often I see traders treating their trading as a hobby. They come home from work, they have a little bit of a flick and a play. And the reality is, if you treat your trading like a hobby, expect hobby results. You need to be treating it like a business. And of course, if you are treating it as a business, if you treat it as a part-time business, you get part-time results. If you trade it as a full-time business, you get full-time results. So it's very important to have that business mentality when it comes to your trading, because after all, we're in the game to make money. We're not here to play. So treat it like a business and you'll be a lot safer in the market down the track. The next one to look at is information overload. And information overload is something that you might end up in, information or paralysis by analysis. And this is something that you frequently find when traders use way too many indicators on their charts, or quite simply, they've read so much information on one particular topic that it becomes a case of there are so many compacting or competing ideas in your mind that you might find you're not quite sure which way to go. And this happens a lot. And even still to this day, I suffer from this myself occasionally. But there are solutions. The best of these is simply walking away, going and getting a good night's sleep, and coming back with fresh eyes the next day or even the following day, and reevaluating what is happening in the market at the given time. With much less information in your head and a little bit of a breathing break in between, it allows you to think a little bit more clearly. So that would be my gifting piece of advice to all of you. Now, of course, in today's video, if there's anything that you do want to try and put into practice, feel free to download an ACY Securities demo account today and turn theory into practice. Of course, if you do have any questions from today's video, then feel free to shoot me an email at talktoal@acy.com. And don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.